Hello, welcome to today's Silver Log. It is the 11th of April, 2011. It is also 11 a.m. Eastern Time as of the recording of this video. And the market has found a retracement, or its first correction since it corrected through time back within here. And this is a price correction so far. We could still trade in a range. Don't know exactly yet how this is going to resolve itself, but it's came down towards the 1-day moving average and some potential support levels breaking past the 1-day moving average, the 5-day moving average, also at 39.75 where there was previous resistance and an upward trend line. I think the best one that we could follow probably would be this one in here. This connects the most points as it connects here, 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 and in here. So it connects 5 different support levels. Thus would be an area for potential support. Most likely these things seem to align themselves where the 5-day moving average would meet up with the trend line at the same time. Not always, but just as a possibility. And I was stating yesterday to expect the unexpected. And when looking at this, what I truly did not expect is $42 to be that of an intermediate term top. Whereas I was expecting it to be 43.40 or maybe 41.40. That's not going to be the case because it bursted through that significant area last night. And the reason I say that is because of the Fibonacci. I noticed a lot of times that the 38.2 and 61.8% just tend to hold themselves at a significant area of previous resistance support. Well, this little area here doesn't really do much. It was a little bit of resistance in here and really just a little bit. Thus, it would be more common for me to expect that this Fibonacci line to match up somewhere within this 39 and a third area, which would be a $43.50 per ounce price. Moving on now to the same chart, but just not as many candles. You can see the move here down to this 1-day moving average. Also, as well as some Fibonacci is concerned, the Fibonacci from this breakout low, which is roughly around 39.50. That's a gain of about $2.50 from this low to this high. Thus, on Fibonacci, that's 62 cents per dollar. Double that number, that would be about $1.25, and add half of 60, about $1.50, which means significant Fibonacci, roughly at around $40.50 per ounce. As far as the volatility movements are concerned, the volatility is going higher, but at the same point, it's not really going massive by any means. And I think there's a good chance that we will find support, whether it be here, whether it be 40.50, whether it be at the 5, not sure on that, and then take out these highs and move up towards the 43 and change area. That's the best guess that I can make, and really that's all that it would be, just based on the fact that I stated earlier that I don't expect that Fibonacci level to be an area where it really isn't that significant of a just lacking resistance. As you can see here, barely ever touching this line. Thus, I would expect this area here, roughly around 39, 33, to be more of a resistance level. As far as the volatility is concerned, the root volatility or the main movements are starting to go a little higher. The one thing that makes it state, yeah, we have more volatility is we have this uptrend line. We have had a few tests or a few hours where it's managed to have 1% moves from top to bottom, but at the same point, it's nowhere near having the massive moves either. So as far as the neutrality is concerned, I look at this more as in not really an increase of volatility, although it is, but increase towards normal volatility. And if that's the case, I'm still going to have bullish sentiments over the next few days. But as far as what's going to happen, just keep on adjusting to the message of the market, which is what I'll continue to do. And The blog will be updated after 5 o'clock Eastern Time today. Thank you for watching and have yourself a great day. Bye bye.